This is exactly what I'm doing to survive this crisis. Hey everyone, Kevin here. Things are pretty frustrating right now when it comes to the whole mortgage crisis and the world of money. Because see, the way things are supposed to work is when times are good, we make a lot of money and we save it so that when things go bad, we can go buy a bunch of real estate and a bunch of stocks. But the problem is, now a lot of us are left without jobs. A lot of us can't make our rent payment, a lot of us can't make our mortgage payments, and because of that, banks are now tightening up like crazy, and they're like, well, I don't want to give money to anybody else either because we're hurting too. And the government's trying to print money like crazy to go, no, it's okay, banks, it's okay. But the bank's like, oh, I don't know. This is still pretty crappy. And so the effect of this is we're sitting around going, wait a minute, we're supposed to be able to buy stocks at the bottom of the market. We're supposed to be able to invest in real estate when prices are cheap, once prices fall, if there's gonna be a wave of foreclosures. But what? Now banks are making it harder to get loans. Except of course for rich people or people with a lot of money. If you've got a lot of money, the banks will still lend to you. But if you don't and you're trying to get started, it's getting a lot harder. So today, I'm gonna break this video down into a few parts. Number one, what the heck is going on? Then we're gonna talk number two, what the impact of this problem is. And we'll talk pricing and real estate and so on and so forth. Then we'll finish off by talking about what we should do. How are we gonna get through this? How can we make money at a time when it seems like the only thing that's happening is the rich are getting richer and people without assets or wealth are getting left behind again? Because let's be real, a $1,200 stimulus check isn't gonna turn us into millionaires. And if you take to Twitter, you'll see that most people seem to be spending their money on shoes and sunglasses, which both of those don't seem to make a lot of sense given that we're stuck at home. JP Morgan Chase just announced that, quote, due to economic uncertainty, we are making temporary changes that will allow us to more closely focus on serving our existing customers. AKA, they are making it harder to get a loan at Chase right now. In fact, unless you are already an existing customer, the odds are you're gonna have to be coming in with 20% down payments and a credit score of at least 700 to be able to buy a house through Chase. Now, Chase has never been one of the most competitive mortgage lenders. I've never really seen them chase business out in my area here in California. I've seen other banks like Bank of America or Wells Fargo chase the mortgage market a whole lot more. So it's not super surprising that Chase is tightening because they've already been kind of tight. But unfortunately, it's not just Chase. So Wells Fargo is tightening lending standards, and you know what? If we just zoom out all of the way, look at this. According to the Mortgage Credit Availability Index, your ability to get a mortgage has declined by a total of 16.1% in March. But we could break this down even further and then things look even nastier. It is now 24.2% harder to get a conventional loan and 36.9% harder to get a jumbo loan. If you're going for a loan like an FHA loan, there's only a decrease of about 6.6% in mortgage availability for these. But overall, the entire mortgage industry is tightening up, which is like the worst time for this to happen because realistically, if good opportunities come up now and you still have a job and you're able to buy something or you're able to go back to work within the next month or two and then you could go buy something, now's the time to do that when there's fear in the marketplace and there are opportunities to be had. But unfortunately, getting a mortgage is getting more and more difficult by the day. In fact, a lot of people who are already in escrow are finding that lenders are now doing what are called a last day final VOE, or final verification of employment, which means the very last day before the lender actually sends your bank's loan money to the escrow company so you can close on a property, they're calling up your boss going, yo, does Kevin still work here? We're about to send over some money to Kevin. Oh, he does, he got furloughed. Bank loan denied. Yeah, that's literally happening right now. And I mean, in some senses, you can't really blame the lenders because the last thing lenders want right now is people getting a bank loan for a house. Then the last day they lose their job and the bank doesn't find out. And then as soon as the loan closes, as soon as the person buys the house, they get right on the phone with the lender and go, hey, I need mortgage forbearance. And then the lender goes, no problem. We got all these options for you that are gonna screw you and set you right up for foreclosure. I've made videos on exactly the kind of crap these banks are pushing. I'll link some of those down below. So if you're thinking about getting mortgage forbearance, watch those videos before you do. This kind of loan tightening and these last minute cancellations are going to have a massive effect on the marketplace because we're gonna lose buyers. And anytime you lose more buyers than you lose sellers, you end up with a basic supply and demand problem. You end up with more people who want to sell than can buy, so in order to sell, sellers must drop their prices. This is only exacerbated by the potential of foreclosures and short sales hitting the market. Now, right now, I personally do not expect us to see a wave of foreclosures and short sales as long as this whole disaster ends ideally by July or August. If it continues on beyond that, yeah, we're gonna have more issues. This is exactly why I told everybody in my real estate investing course, in our live streams and in lectures that I'm releasing for this pandemic, that if you are buying real estate right now, the only kind of real estate that you wanna be buying right now is either off-market real estate, where you're getting a deal because it hasn't even been tested on the market, because yes, some places are still getting multiple offers when they hit the market, or you're somehow buying a property below market value, which is generally the easiest way to build massive wealth in real estate, getting a wedge deal, something that is worth $300,000 that you could buy for $200 because it needs some paint, carpet, it's got some smelly mold, and mom and dad who go look at it with you go, oh, this place is gross, why would you buy it? And that's exactly why I would buy it, because people that look at places that are stinky and gross go, oh, gross, I can't move into that place. Exactly, that's where the money is. That's the kind of place you buy. Right now is not the time to buy land, to buy apartment buildings, to buy commercial real estate. All of these things, well, first of all, apartments are priced to perfection. They had been for quite a while. Many more commercial tenants are refusing to pay their leases for their office spaces because they're working at home and they don't have the money to pay for their mortgage and their commercial lease for their work, like insurance agents or real estate agents or people working in strip malls or whatever. These things are all shut down. And I certainly wouldn't be speculating on land development or flips right now. You need to insulate yourself against the potential of prices shifting downwards. Which, by the way, some of you have asked me, hey, Kevin, I heard you mention that you got life insurance for yourself and Lauren. Are they actually still issuing life insurance policies during the outbreak? And surprisingly, I checked with them. The answer is yes. So if you want a free quote, use that link down below. Make sure to also get your 2 free stocks with Webull, because why not? Just make sure you deposit $100, and that way you'll get the best 2 free stocks possible. Of course, it's a random draw, which means some of you get $15, some of you get $10, some of you get $100, some of you get $1,000. It's like a lottery ticket. Here's just an easy way to picture insulating yourself with your money. If you buy a place for $200, you put 20 grand into it and you're into it for $220, it's worth $300 today, even if it falls 10% to $270, or it falls 20% to $240, you're still up in value. And those are the deals you want to look for right now. Those are the deals we analyze every day when we go live in the private live streams. But here's exactly the data as to why we might see some more issues. 43% of people put 20% or more down when they buy real estate. That means if they buy a house for $100,000, they're putting at least $20,000 down. But that means 57% of people are putting less than 20% down. That means they're putting down 5%, 10%, 15%, 3.5% down FHA. Now, while it's still possible to get these lower down payment loans, it's harder. That means for this 57% group of people, the majority, it's becoming much harder to get a loan. On top of that, that 43% that I told you puts 20% or more down, a lot of those people get that money from the house they currently live in by either refinancing, taking out a credit line, or selling the property, which means a lot of money is tied to real estate in terms of the new buyer pool. People either have 20% down, which a lot of those people are getting it from either stocks or their home that they already own, or they're putting less money down, but those standards are getting tighter. So your entire buyer pool is getting reduced dramatically at all angles here. And so what are we to do about this? Why don't we just save cash, sit on the sidelines, and do nothing? Well, you might do that, but there are really 2 paths to go here to make sure that you can build wealth during a crisis like this. Number 1 is the path you take if you believe the Federal Reserve is going to stop printing money. If the Federal Reserve stops printing money, we might enter a deflationary period where prices go down and in which case you'd be best served by having cash and potentially a mix of gold and Bitcoin. Option number 2, if you believe the Federal Reserve is going to keep printing money, and even though inflation is reducing, we're seeing less inflation, we believe we're still going to be in the positive territory of inflation. That is, we still think prices will go up. We think more money will be printed, and we think the Fed will continue to prop up the economy. Then the only way not to get left behind, AKA the only way to get ahead, is to get into assets. Here are 3 ways to get into assets. I'm going to go through the number 1, the super easiest way to do it, but not my preferred way. Then I'm going to talk about the next easiest way, also relatively safe, and then I'm going to talk about the more aggressive way to do it. Let's talk. Now remember, only go through one of these 3 options to buy assets if you believe that the United States is going to keep printing money, the Federal Reserve, and you think prices will go up in the long term, like stocks will go up in the long term or real estate will go up in the long term. If you think in the long term that in like 15 years prices are going to be lower, then hodl Bitcoin. Look, I'm not a proponent and I'm not anti-Bitcoin. I just don't know enough about Bitcoin to talk about Bitcoin. Let's talk about these 3 asset purchases though, especially if you're a total beginner. Total beginner, safest possible way to get into assets, though not my favorite. Dollar cost average index funds on red days. Here's the easiest way to know if the market's down. Type into Google, DOW space stock. Hit enter. If you see green, it's generally a green day. If you see red, it's a red day and it could be a good day to buy. Then you want to log into something you could actually buy index funds with, like Chase U-Invest if you have a bank with Chase, or alternatively go to metkevin.com/M1 so that you could really appreciate it if you did it. By the way, use my referral link to join M1 Finance, where you can easily invest in index funds automatically. Great platform, by the way. They also have a checking account that gives you a 1% yield, and I have my little debit card here, although I haven't used it yet because I've been on lockdown and I'm generally not the biggest fan of using debit cards. The next safest option, in my opinion, is keep your money in cash and get pre-approved to buy a wedge deal. A wedge deal is going to generally be, in this market, a single family house that you can rent out for something similar to your monthly payment, and the property is in a distressed cosmetic condition and appears to be selling for below what everything else in the neighborhood is selling for. I just did a walkthrough on a 2-bedroom, 1-bath house in Santa Barbara, and I know these prices are crazy, so don't flame me in the comments for saying these prices. It's just honest. Like this just happened. I went through a 2-bedroom, 1-bath house that was listed for $589,000, needed cosmetic work. Every 2-bedroom, 1-bath in the neighborhood is selling for $800,000 to $1 million. These deals exist. Yes, you're going to have to be competitive. Yes, other people make offers. Don't get discouraged though. If other people are making offers, it's a sign that you're actually getting a good deal below market value. See, if I buy that 2-bedroom, 1-bath house, even if I pay $625,000 for it, and even if I spend $30,000, $40,000 fixing it up and I'm into it for $660 or whatever, real estate prices would have to fall almost 25% for me to be break even. Like I'm still protected from loss because I got a good deal. That is a great way to buy an asset. And obviously the goal is not to flip. The goal is to hold these properties for the long term. So that way the next recession, you could use the equity in these deals to again go shopping for more deals. So if you're thinking real estate, the only option on the table right now is something that's substantially below market value. Now here's the third and more aggressive option. This is what I'm mixed between. I'm between number 2 and number 3. This is exactly what I'm doing to survive this crisis. Every red day in the market, I am buying bounce back stocks that I believe are selling substantially below market value, and I am buying these like crazy. Some of these examples are Tesla when it was selling for $400, the Simon Property Group. a real estate investment trust that I was buying when it was $42, $45, $50, $58 a share. These are trades I talk about not only on this channel, but also in my private live streams every day at 9 a.m. when the market is open. So plenty of opportunities there. But the reason I'm buying stocks aggressively right now is because I think a lot of them have been substantially oversold. So every time there's a red day, I buy. As that equity is building, I am looking for good deals, and as a good deal, a good wedge deal from number 2 comes up, I can move money out of stocks and into these good deals in real estate. So if I don't find a really good deal in real estate, I'm at least riding the stock wave. If I find a great deal in real estate, which deals regularly come up, and I'm expecting even more deals to be coming up soon as this crisis evolves, I could move money from stocks to real estate. Now, I have not sold stocks in over 10 years. The very first time I sold stock was when I was sold stock at 18 years old to fund my down payment for the house that I bought when I was 19 years old with Lauren. The stock move here is obviously much more aggressive. The real estate move, in my opinion, is still very safe. See, and that's the basic reason I love wedge deals so much, is because I know I'm gonna get some comments that are like, oh, well, Kevin, the market's not gonna fall 25%. It's gonna fall 35% or 40%. Fine, but if that happens, worst case scenario, I would rather have bought a house 25% below market value. So that way, if the market value does fall, say 35%, I'm only down 10%, rather than having paid market value for something and then seeing it go down 35%. So get deals either off market or only buy wedge deals. I'm not touching any kind of speculative opportunities, no land, no development, no apartment buildings, no commercial. I don't see opportunities in any of that right now. If you could find a panicked seller though, that thinks we're going for the big double dip, that's the person you wanna buy from. And look, I get the fears that there might be a double dip recession. I heard literally the same words in 2010 and 2011 when I started getting into real estate, when I bought my first house with Lauren. We each combined the $9,000 we had, used $18,000 to buy a foreclosure for $300,000. And since then, we were able to turn that $18,000 into over $250,000 in net worth on just that one property. That enabled me, that start enabled me to build an over $8 million real estate portfolio. And I'm only 28 years old, which means you can do this as well. These are the principles I teach in my investing program. But think about it this way. Now, if we have no assets, it's very difficult to go shopping for good deals. It's very difficult to buy bounce back stocks. It's very difficult to buy real estate deals if we don't have a lot of cash. I don't have a lot of cash sitting around because I usually invest my cash, but what I do have are a lot of assets with a lot of value in them. And because of that, I could borrow against that value and go shopping. That's the name of the game in the United States if you believe the Fed is going to keep printing money. Obviously, if you think we're going to go in a deflationary direction, you don't want to go with this direction. But if we look at history, there's no indication the Fed's going to stop printing money. So I'm going to keep buying wedge deals. I'm going to follow my mix of method 2 and 3. Let me know which one of these you prefer, method 1, 2, or 3, or if you're in the deflationary camp and you think everything's gonna go bankrupt and the bubble's gonna explode and the world's coming to an end, I wanna hear from you as well. Let me know what your thoughts are down in the comments below. Thank you so much for watching, and until next time.